From the trading desk of DailyForex.com, this is Christopher Lewis looking at the upcoming February 25th Forex session in the euro dollar. As you can see, Friday was an interesting session. We went back and forth. We tried the 132.50 level, which has been support and resistance previously, and failed there. And then, of course, failed at the 131.50. This makes sense that the markets essentially did nothing at the end of the day. And if you think about it, we have the Italian elections coming on the 25th. So really, a lot of people more than likely wouldn't have wanted to carry any type of risk over the weekend. However, I think there's a little bit of weakness coming. We have broken a little bit of a trend line here. But on top of that, I see support at 1.30. And I think that's probably about as far as we go. Going forward, the break of 132.50 to the upside, of course, would be very bullish, but we have to wait to see what reaction the market has to the results in Rome. There are a lot of anti-austerity people on the ballot, and there's a good chance that it's going to be negative for the euro, and that's why I personally believe, at least at this point, that it's probably biased a little bit to the downside, but I'd like to see that reaction first. A break of the lows, I believe we go down to 130. Now, that being said, it is a parliamentary system, and unless you're familiar with that, they can be confusing. To say the least, you get different parties, coalitions get involved, and then you get a bunch of politicians arguing and not really agreeing on anything, which ironically enough, in our two-party system here in the United States, we have pretty much the same thing. But having said that, Italian politics can get very murky. After all, two of the top three candidates for prime minister have felony records. Just give you an idea of the kind of situation we have in Rome, and as a result, it's very difficult to tell how this is going to play out. But at the end of the day, technically speaking, it looks like we're probably going to see a little bit more weakness and then a bounce. If 130 gives way, though, then the floodgates open, and it's really hard to tell how low we go. Right now, though, it's really difficult to see any type of significant move because at the same time, you have the Federal Reserve looking to add quantitative easing, or continue it at least. They did state the other day that some of the members were exploring the idea of possibly not extending it as long as they thought. It'll be very interesting to see what Bernanke says in front of Humphrey Hawkins, the biannual testimony that he gives to Congress. If he starts defending quantitative easing, you can expect this pair to go higher, because in the end of the day, there are a few things out there that can move the currency markets more than the Fed talking about killing the dollar. So we have a lot of potential movers in the upcoming week, and Monday will more than likely be a relatively quiet session until we get some results out of Italy. And once that happens, totally different game. A lot of more than likely going to be a lot of volatility going forward, which at this point in time is something that we should all be used to.